Okay, good morning. Even though it says I'm Karen Grove, I don't think so. My name is Jerry Glenn. I'm a mentor with SCORE, Lancaster-Lebanon, and we're here today to talk about LLCs, who should have them, who shouldn't, how to go about it. We have an expert here to help us, Maninfor, and Derek Maninfor, excuse me. He'll be talking about that in just a second. Just a couple of comments about SCORE. As many of you know, we are a volunteer organization who helps small businesses, either startups or those who are already in business. We provide free business counseling to these small businesses. We also have workshops, as well as groups who will come in and act as a board of directors for you if that's needed. Currently, we have 80 volunteers in our Lancaster-Lebanon group, and we are anxious to help any and all small businesses. Now, as far as today, Derek Maninfor is an interesting fellow. He got his master's degree in music and decided that while that was a wonderful thing to have, it may not be enough to raise a family. So he went back to law school, to Temple, graduated, and then got his degree and started with Bergon Davis here in Lebanon. He's been with them for 2 years.
9 months.
Okay, close. and is working towards his specialty in commercial law, which is exactly what we're interested in. So without further ado, I'd like to ask Derek to come up and talk to us.
Good morning, everyone. Thank you for joining us virtually this morning. First of all, I want to say thank you to Jerry and Lori and Karen and everyone who played a part in making this event possible today. Hal Rank and Kevin Saint's here as well. So as Jerry mentioned, I am an associate attorney at Busgen Davis, and I've had the pleasure of working alongside the talented attorneys in that office for the past 9 months. Give you a little bit, briefly, a little bit more by way of background. I clerked while I was in law school for a firm in Trenton, New Jersey that specialized in commercial business law. Really got the chance to cut my teeth there and learn about the different types of business structures that are in place, the benefits and drawbacks associated with each. And upon completing my internship there, joining Busgen and learning alongside the attorneys here, which is commercial business law is a large part of our practice at Busgen. So it's a pleasure to be with you, and I look forward to getting started here.
Before we get further along, if anybody has questions, please put them in the chat, and we'll address those as quickly as possible. This is being recorded as well. For those who may not be able to attend all this, we will be sending this to everyone who signed up for this presentation.
Great. Yeah, thank you, Jerry. I do that because I find that if I wait until the end for a Q&A session, people typically forget what they wanted to ask or something of that nature. So if something piques your interest as I'm going along here, don't be bashful. Just type it into your bar there, and we'll do my best to answer your question here. So without further ado, let's get started. So great, thank you. So we're here today because many of you have an idea for a business or already have an idea and have started a business. It's important to point out initially at the top that there are tons of different business structures out there that are perhaps appropriate for your needs or where you're at in the life of your business. So many of you are probably already aware there's a sole proprietorship. So a person who is the owner and operator of their business, makes all the decisions and has all of the control. Partnerships, general partnerships, limited partnerships, and things of that nature. Oh, that's no problem. Hopefully everyone can see the PowerPoint now. Great. No problem. Thank you. And then obviously general limited partnerships, limited liability, and then limited liability companies. And then obviously everyone's familiar with probably the most recognizable structure of the corporation. Two different types of corporations, S corporations, C corporations. Our focus for today, as you would guess by the title of the presentation, is going to be limited liability companies. So why are we focusing on this structure, and why is it so beneficial in many circumstances? Because the limited liability company is really a hybrid. It's a hybrid of a partnership in that it allows for a great deal of flexibility and control over managerial and operational functions of the business, while also combining that with the protections of a corporation, in that there is the limited liability. There is the so-called corporate veil, which many people I'm sure have at least heard of. So that is the reason we're focusing on that structure today in particular. Now, one of the things that, one of the initial decisions you make before you even take the first step in filing the needed documentation is deciding, how is your company going to be structured? Are you going to have a single member LLC or a multi-member LLC? So a member, you have to sort of think analogously to a corporation here. A member is an investor, an owner of the company, owner of the business. They're analogous to the shareholders in a corporation. Single member LLC is the owner of the company, and they're also the one who has all of the control over the day-to-day business operations. They're making all of the important boots on the ground decisions, as well as high-level strategic decisions that are best for the company. Multi-member LLCs, so two or more members agree to give, two or more members who have an equity stake in the company. They may decide or elect to designate one member or a third party to be the one who has the day-to-day operations and all of the operational concerns of the business in mind. So again, this is just to say that the members are the ones, not necessarily are they in a passive ownership role. They could also be ones who are making strategic operational decisions within the company. Primary considerations with whether to have an LLC versus any other type of business structure. You want to consider your liability exposure, and you want to consider tax consequences. Those are, there are other concerns, but none more important than those two. So I'll start off talking a little bit about the protection from liability that the LLC structure offers. This comes straight from Pennsylvania statutory law. This is a hard and fast, ironclad rule of law in Pennsylvania. A debt, obligation, or liability of a limited liability company is solely the debt, obligation, or other liability of the company. A member or a manager is not personally liable directly or indirectly by way of contribution, blah, 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 debt. Statutes are rather boring to read, so we try to pull out the most important stuff. What this is, this establishes the reason for the existence of an LLC. It is a separate legal entity from the people who own it. The people who own it are not liable for the actions or the debts, liabilities of the company. There are, as with every single general rule, there are exceptions to the general rule, which we'll cover in a little bit. But I first want to give you kind of a background for why this is. Everybody understands the concept of limited liability, but there's a rationale behind it that's very important, and that Pennsylvania courts and really every other state in the country recognizes, is that the courts have recognized that in order for businesses to be a profitable venture, for people to be willing to take the risk to start a business, there has to be some sort of protection in place, in that if I decide to open a business, let's say I want to open up a taxi company, right? So I purchase all my taxis, I get all the equipment, I hire employees, those are all the property of the business. If I'm on the hook personally for something that happens in the regular course of business, that would greatly disincentivize people from being willing to start companies, to take risks in the first place, if they knew that if in the event something happens in the course of business, a plaintiff could come after me individually, could get a judgment and attach that judgment to my house or my car or any other assets that I own. Look, starting a business is risky enough. But when you add that prospect on top of it, the courts have recognized that that often would be too much of a deterrent and it would squelch economic growth. And for that reason, that's kind of the rationale behind the limited liability concept. Now, as I just said, there are rules and then there are exceptions to rules. So a little bit ago, I mentioned this concept of the corporate veil. And the corporate veil is essentially what I just described as being this protection from personal liability. However, there are exceptions as recognized in Pennsylvania as applying to the LLC. Now, you see that I have the word corporate in quotations there. This doctrine was devised and most applicable to corporations. However, the case that you see listed there at the top, Advanced Telephone Systems, was decided at the early part of the 20th century, 21st century. The Pennsylvania court in that case held that the corporate doctrine of piercing the corporate veil essentially applies to limited liability companies as well. So what does this mean? If certain conduct that happens in the course of operating business, such as fraudulent dealings, misleading other business professionals, consumers, or self-dealing within a business like that, that could cause or be a basis for piercing the corporate veil. In other words, ignoring the separate legal entity status of the LLC and going after the owners of the company individually. Now, what are the circumstances and what are the factual predicates in play before you get to that situation? It just doesn't happen, right? There's situations where, if an individual grossly devalues the corporate or the LLC by not giving enough capital, by not putting any assets into the LLC. If you disregard legal formalities that are supposed to be in place for operating the LLC, such as having an operating agreement and not following its terms, that could be a basis. If you were to commingle business and personal assets in the same bank account, so you have bank accounts but there's no daylight between which one's the personal bank account and which one's the business account, that could also be a basis. So self-dealing sort of fits right in with that commingling aspect. No one factor is really going to be sufficient to allow the court to pierce the corporate veil, but the court is going to look in the aggregate as to the conduct of the owners of the LLC and see what's been going on here. Are there insurance requirements in your particular industry where you have to be insured up to a certain point? Do you have that insurance in place? Is this a shell company essentially? Does your operating agreement provide that you have to have an annual meeting or that you have to have a certain percentage vote in order for a business decision to be made? And if you're not following any of those formalities or any of those requirements, the courts are going to look at that with skepticism and say, is this really the kind of company that's, conducting business in good faith, or is this being used for an improper purpose? So it's not an easy feat to pierce the corporate veil. As I said before, the concept of limited liability is very important to the development of commerce, the development of the economy, and to encourage people to take risks and start businesses. But at the same time, if your conduct is egregious enough, if it's continuous enough, Pennsylvania courts will allow plaintiffs to pierce the corporate veil and reach the individual owners.
Question. On the previous slide, at the bottom there, you talk about owners and managers are not personally liable unless they personally guarantee. I think that's a big one. That's a biggie. And that one might be on my next slide here. Here we go. Yep. Okay. So another exception, that's piercing the corporate veil is I would say the largest exception, but again, there's a lot of things that come into play when you do that. There's a very robust factual scenario in play. Other exceptions to this concept of limited liability include starting up a company takes a lot of money. It takes a lot of capital to get the thing off the ground. So sometimes what people do, they'll find them in situations where they're looking for credit, and the bank or loan officer will say, "Yeah, I'm willing to loan your business, a loan here to get you off the ground." But I'm a little hesitant to do so because right now this is such a new company. I'm willing to do it if you personally guarantee the loan. If you personally, as Derek Maninfor, who's starting this LLC, if you'll put your own skin in the game here, I'm willing to give you a business loan. In that situation, you have to be aware when you personally guarantee a loan like that, you are putting yourself essentially on the hook for that debt. That would not fall under the protection of the corporate veil. Another exception here applies to restricted professional companies. In Pennsylvania, these are companies that specialize in chiropractic medicine, dentistry, law. You see them listed there, accounting, psychology, veterinary medicine. And the rationale there is that, well, first let me just say that those companies who practice in those very specific areas can be held liable for malpractice if something occurs, if there's some sort of fault that happens there with respect to practicing in those fields. So the rationale behind this decision is basically that, okay, if we're going to have someone, practicing dentistry or law or medicine, these are really consequential practices that could grossly affect people's lives if it's done in a way that's negligent or something like that. So courts and the General Assembly have allowed for liability to the extent of malpractice to incentivize people who open up these LLCs to be careful, that they won't be able to rely on the protection of the separate legal structure with respect to liability if something goes wrong. So that's a little bit about legal protections that an LLC offers. I want to talk a little bit about the other consideration that we spoke about, which is tax consequences of choosing an LLC. So full disclosure right up front here, I'm not a tax attorney, and I was lucky enough to learn that we had a CPA join us in person here today. So perhaps in conjunction with some questions that come through about taxes, there could be some sort of deferral in between, because it really does involve your attorney and your accountant working in conjunction to determine the best outcome or the best decision to be made. So I'll give you a brief overview of the tax structure of an LLC. The biggest benefit and the reason why people form the LLC company is because the LLC is a pass-through entity. Okay, what does that mean? Corporations, let's take, for example, corporations, certain types of corporations, the C corporations, undergo double taxation whenever they're reporting their annual taxes. This means that the corporation as a separate legal entity receives income and is taxed on that income at the corporate rate. So it's taxed once there. Now, when the corporation declares dividends to shareholders, those dividends are then taxed a second time as income to the shareholders. So in effect, certain types of corporations will undergo double taxation. Now, the benefit with an LLC is that the LLC is a pass-through entity. So what happens? The
the income made, the business income made by the LLC, which is still a separate legal structure, passes through to the members of the company. So the income is essentially imputed to the members of the company as a pass-through entity. Now, you might say, okay, why is that good? That means I have more income to report on my personal income tax. Well, consider not only income passing through, but also losses, business losses of the LLC. Also, those pass through to the members. So those are able to be claimed as deductions on the members' individual tax returns there. So for the purposes of federal taxes, LLCs have to elect treatment as a pass-through entity on their federal taxes. Pennsylvania treats LLCs as pass-through entities by default. Ignore that word corporate there. They're not corporate entities. They're still LLC entities. I meant to take that out, but I do apologize. That should not be misleading there. They're still LLC entities, not corporate entities, but they're treated as pass-through entities for purposes of state law. No questions about taxes? That's usually one that generates
Well,
some.
actually, LLC can be taxed as any of those. You decide generally the first year the tax return is filed.
Yeah.
So an LLC can be taxed as sole proprietor, as a partnership if there's more than one member, as an S corp, or as a C corp.
Okay.
So the LLC itself does not determine that.
Did everyone hear that? Yes. Yeah. Okay. Everyone in this room heard. Good. So we've talked a little bit about these important considerations such as liability protection, taxation. Now we have to talk about sort of the meat and potatoes of how do you go about forming an LLC? And the reality is it's pretty simple. The process of filing the necessary documents with the state, pretty straightforward. It does get complicated when it comes to creating the operating agreement. There are some things there that you have to watch out for, and it's probably best to get an attorney involved for that portion. But we'll talk a little bit about the operating agreement in a second. So the first thing you want to do in forming an LLC, and this can all be done online, is confirm that the name is available, the name that you plan to use for the LLC. And this is done generally for trademark purposes and wanting to ensure that you're not infringing on any other person's state or federal trademark rights, especially if there is some type of insignia or logo involved with your business. The second thing that will need to be filed with the state is a certificate of organization. Now, we've talked a lot about, there's an analogous relationship between LLCs and corporations. Think of the certificate of the organization as analogous to the articles of incorporation for a corporation. Okay, so this is essentially the document that brings the entity into existence. And for anyone who is curious, it's Form 8821 in Pennsylvania, and there's a $125 filing fee. On the certificate of organization, you're going to need to come up with the name of your LLC. You're going to have a registered office. Must be a Pennsylvania home or office address. Cannot be a post office box. So you have to have a physical mailing address. And I'm sure some of you have maybe heard there are these businesses out there known as CROPs, who are certified registered office providers, who will actually provide you for a nominal fee a physical mailing address in the state for the purpose of filing the certificate of organization. Yes?
How do you determine if a name is available?
So that's a good question. You can do that online at the PA Secretary of State's office. I'll actually, as a follow-up, I can send out the link to do that. I don't have the URL in memory, but I can look that up and provide that information. But in general, I'll get you the link to it. It's a simple process. It involves typing in the name of your LLC that you want to use, and it will go through the database as to what's on file in the state's office, and we'll let you know if there's any hits for something or anything that's similar. So I'll provide that. The certificate of organization is also going to require that you provide the names of the organizers of the LLC and the effective date of certification. The effective date of certification, it's most useful just to, there's a box on there you can check to say whenever the state processes the certificate of organization, that'll be the effective date of the beginning of the business. Next, you're going to need a docketing statement. This statement lists the individual responsible for filing initial taxes, and it also will require that you give a description of the business activity. It doesn't have to be an extraordinarily detailed description. So if you're like me and you're starting an LLC operating a taxi cab company, it would be operating taxi cabs in the state of Pennsylvania, in the city of such and such. So it would be just a very brief overview of what your purpose is as a business. Next thing you'll need to do, you'll need to apply via the IRS for a federal employer identification number. Important point to highlight here, you want to wait and file the LLC documentation first before you apply for your EIN. That's because when you apply for the EIN on the IRS website, they're going to ask you for the effective start date of your company. And if you don't know that because it hasn't been approved yet, then it's going to slow down your process applying for the EIN. So get your LLC documents in place first and then apply for the EIN. And there's no fee to apply for an EIN via the IRS. Okay, so as promised, let's move on to the operating agreement. So if the certificate of organization is analogous to the articles of incorporation for a corporation, the operating agreement you can think as being the constitution of your business, of your LLC. It's the bylaws, if you will, the document that tells the who, what, when, where, how, why, all of that stuff. The operating agreement is an internal document, does not need to be filed with the state. And some of the information that would want to be covered in an operating agreement includes the relationship between members as members in the LLC. So what that means, is this a single member company or a multi-member company like we discussed earlier? Are members going to be acting in a passive investor role, or will they also have roles, managerial roles in the company and things like that? You'll want to talk about the rights and the duties of members and or managers with respect to who carries out what function. You'll talk about the ownership and division of profits. I believe the next slide contains more information about this. Yep.
Question is, do you have to apply for a new EIN if you're going to an LLC from a sole proprietor and already have an EIN?
You already have an EIN. The LLC is a different entity. I will follow up and get a for sure answer, but my inclination is yes, you would have to apply for a new EIN if you're starting a new entity, because it's, as far as this, the IRS is concerned, it's a whole nother identity from a sole proprietor. But I will follow up as well. That's a great question, and double check for sure on that.
Another question on that, I believe in the EIN application, you have to indicate whether you're going to be taxed as an S corporation, corporation, sole proprietor.
Right.
So it's important to have those questions answered, I think, also before you apply for an EIN.
Right, right. Yeah. So Rhoda mentioned that you have to, in your EIN application, you also have to elect what kind of tax status you're going to be filing as, whether you're an S corp or a sole proprietor or a partnership. So in general, this sort of underscores my point earlier. Make sure you have your LLC documents completed and even approved before you begin the process of getting an EIN. So Lori, I'll follow up as well with that last question. Okay, operating agreement. So activities and affairs of the company. You want to talk here about the type of business you're going to be conducting, and who will carry out what functions and things like that. You want to talk about how you go about if you find a time down the road where the operating agreement needs to be changed for whatever reason. you want to change the division of profits or the division of ownership, you have to include a provision in there for how you go about doing that. What are the processes involved for amending the operating agreement? And you want to talk about what's required before a transaction is approved by the LLC. Is there a certain percentage vote that needs to occur before a transaction can be approved? That would all be laid out in the operating agreement. Some of this is underscores what I just mentioned here. Voting power, again, this may be with respect to approving a transaction. Usually it's proportionate to ownership, but it doesn't have to be. There's some flexibility and some freedom with drafting an operating agreement. The LLC is really a creature of contract law, and the operating agreement is the contract. So what the members agree to and everything that's entailed in that document will be honored and will control. So there's a statute here. The next slide, or the next bullet point, says that profits and losses are equally split unless otherwise stated in the operating agreement. So if you don't put anything in your operating agreement about how the profits and losses are going to be split, the state of Pennsylvania has determined that this is an important enough factor or concern that we're going to go ahead and give you a default provision, but you're free to change that in drafting your own agreement. The operating agreement will also address issues such as how can I sell my interest in the LLC? Are there any restrictions on selling my interest in the LLC? Are there any situations which would occur in which interests have to be alienated in the LLC, such as an event such as death of a member or disassociation? And the operating agreement would also cover the return of capital contributions upon the end of the LLC, upon dissolution.
I've been involved in several of these over the years as a SCORE mentor. And this is the most important part of it, in my opinion. How you get out of this if things don't work.
Right.
I've just had a corporation or an LLC who had one of their members pass away.
Yeah.
And they had it all in writing, no problem. They were able to manage through that because it was all in writing, all in their operating.
Yep.
Had it not been, it would have been, could have been a real mess.
Yeah,
so this is really, really important when they talk about it.
And I think more than anything, and just to underscore that point, the issue here is communication. Before, when you are starting a business and you're getting into some type of venture, you want to be completely crystal clear with everyone that's involved as to what the terms are for profits, losses, interest in the corporation, and in the event that this company cease to exist, how are we going to get out of this? Because it only opens the door and invites litigation and disputes if you're not clear in your operating agreement about those kinds of terms.
Is there a template to get started with the operating agreement, or do you suggest doing everything alongside an attorney? The operating agreement seems very formal. Is this actually required for an LLC that's currently run as a sole proprietorship?
The operating agreement is a requirement, and it is almost. I feel I would be committing malpractice if I advised someone that they didn't need to worry about the operating agreement because it's that important. It is the Constitution. It's the ways and means, everything involved with the business. So yes, absolutely. The operating agreement. Now, obviously, you may look at me and say, "Oh, here's an attorney telling you need to hire an attorney to draft an operating agreement." Operating agreements are complex. They are complex documents. This is not something you can scribble down on a line sheet of paper and call it good. There are certain formalities that the state expects and certain, call it magic words, or certain things that are addressed in your operating agreement that an attorney would be most familiar with and could advise you on. The fact that the first part of the question is about a template, and there are, to the extent of what I just said, that there is, certain things that have to be addressed and certainly should be addressed in the operating agreement. You could have a template which addresses those things, and you really then go in and fill in the dots or fill in the blanks with sort of, okay, well, we want our division of profits to be this, or this is how we're going to require someone to alienate their interests. You can fill in those details, but certainly there's an element of it that's definitely pro forma, I would say. So, so that's question one. Okay.
So question two. How general can the operating agreement be for an LLC? For example, I want to teach self-defense and sell aprons, and my son wants to rent out a trailer. Can all this be lumped into one family LLC?
So that's an interesting question as well. So the issue there, I think, is you run the risk of having, when you have a very broad operating agreement for an LLC, specificity is always better, because the more T's that you cross and the more I's that you dot leaves less up in the air, and the less people will have to guess about it later in the event that someone passes away and is alienating their interest in the LLC. In terms of the question about selling trailers and have it, what was the first
I
word?
want to teach self-defense and
Self-defense.
sell aprons, and my son wants to rent out a trailer.
I mean, any legitimate purpose, you would have to include this in your docketing statement. You would include the purpose of the LLC's existence. And if it's a legitimate business purpose, I mean, teaching self-defense is a legitimate purpose. Selling aprons is a legitimate business purpose, and selling trailers is a legitimate business purpose. The one concern I would have, and the one thing that sort of raises a red flag in my mind, is just the broadness of that, all of those things combined together in one. But I don't think it's I wouldn't say it's a major concern, and that would be a fine to have a business with those defined business purposes.
Just to comment on the profits and losses not being split equally, automatically throws you into a partnership. I believe that, again, that's a decision, what type of entity are you going to be taxed as?
Right.
That needs to be decided in conjunction with forming the LLC. So again, accountant and lawyer working together.
Yeah, I get it.
It's the
So
best.
also, Rhoda mentions here for the purpose of retaining your status or retaining your identity as an LLC, there could be certain tax implications if you're not specific enough about the division of profits and losses that you would certainly want to address to make sure that that's clear. Good. So I hope those answers were helpful. So we'll move on here. Again, anyone has any questions, feel free to type them out. This is great. So the state of Pennsylvania, through the General Assembly, has decided that there are certain things that you cannot alter in your operating agreement. You cannot agree, for example, to eliminate fiduciary duties. Fiduciary duties, that could be the topic for a whole other presentation. There's so much to discuss there. Fiduciary duties, for our purposes, I'll just say that the members of an LLC owe fiduciary duties of loyalty and care to the managers and other officials of the business to operate. So the duty of loyalty means you have to, in making decisions, making business decisions, you have to have the best interest of the business in mind with respect to those decisions. There can't be any personal considerations or self-dealing or self-advancement involved in those decisions. The duty of care basically says you have to be informed about the kinds of business decisions that you're making. And you have to consult experts in making those decisions, be it financial experts or legal experts, what have you. So bringing it back to the operating agreement, you cannot eliminate those duties via the operating agreement. You also can't eliminate the contractual obligation of good faith and fair dealing. That means when you enter into a contract with someone, the law holds that there's an implied covenant of good faith and fair dealing, that you're going to both make good faith efforts to comply with your contractual obligations. The operating agreement cannot affect that either. The operating agreement cannot restrict the right of a member to sue the LLC, to sue another individual or entity affiliated with the LLC. It cannot provide indemnification or exoneration in violations of the limitations of liability. Okay, what does that mean? That means if there's a situation where there's self-dealing or there's all of the factors we talked about, which might lead the court to pierce the corporate veil. If the court does in fact pierce the corporate veil and find that the personal owners of the LLC are liable, the operating agreement cannot provide indemnification, meaning, okay, we'll cover all of your liability, or we'll say we'll hold you completely harmless from the conduct that you did in conducting the business operations. That would be in violation of the limitations of liability. So again, there are some things that the operating agreement, as I said earlier, it's a creature of contract. There's a great deal of flexibility, but you want to be very specific about everything. But there are certain things that you cannot contract around as a matter of public policy. Okay, so moving right along here, we've talked really about a lot of the elements of formation. Now your LLC is formed, you're complying with all of the requirements for maintaining the liability protections, you're filing all the necessary tax documents, and everything's good there. Now, okay, so you're operating the business. What do you have to do legally to keep yourself in compliance with Pennsylvania law? Interestingly enough, a lot of states require an annual report to be filed every year for LLCs. Pennsylvania does not, with the exception of restricted professional companies. We'll talk about that in a second. So Pennsylvania requires a decennial report. So a report every 10 years has to be filed. And the purpose of this report is the owners of the LLC are saying to the state, yes, we're still in existence. Yes, we're still using our names. We're still here. And it's basically like a check-in. Now, there are some exceptions. Remember, exceptions to all the general rules. If the LLC files anything with the Bureau of Corporations within the last 10 years, so if you amend your docketing statement or if you changed your registered office, you do not have to file your decennial report because essentially you've already achieved the function of a decennial report. You said to the state, hey, we've been here, we're doing business. Here's a couple things we need to change or update. So in that situation, the decennial report isn't required. And just to give you a sense of what that would look like, LLCs formed prior to January 1st of 2012 would have been required to file a report on or before December 31st of last year, unless they filed a document with the Bureau of Corporations within that same time period. That would include your certificate of organization bringing the LLC into existence. Yep.
Question. There's going to be a number of people on this call never heard of this.
Okay. Yep.
And I'm a small business guy. I've been in business 10 years. How do I know that I should file this? Does the state send me a notification?
Yep. The state will, in the months before your decennial report is due, will send you like a postcard or something like that saying, reminding you that, hey, we haven't heard from you in the last 10 years. You're going to have to file this report. And the report is not a very lengthy report at all. It's basically just affirming that certain facts about the LLC, your name, information like that, and then filing it with the state, and then you're good to go. So another aspect of, so I'm sort of thinking of this in terms of the timeline. We talked about the formation and all of the implications there. Now we're kind of in the we're at our cruising altitude here. We're operating businesses, we're filing reports, distributions. So So in the same way, corporations will periodically declare dividends to shareholders. LLCs can declare distributions to the members of the LLC. However, there are some exceptions. Once again, seems to be the theme of the day, right? LLCs may not make distributions. There are a couple of scenarios here. If they are insolvent, okay? So in Pennsylvania law, we measure insolvency by 2 ways. So there's something called the equity insolvency test. This means just as a matter of course of business, can the LLC pay their bills as they become due in the ordinary course of business? If the LLC is defaulting on their loan obligations or on their bills for an extended period of time, the LLC may be considered insolvent, and then a distribution made thereafter would be heavily scrutinized by the courts if a lawsuit were filed. The other test there, so we have equity insolvency, and then you have the balance sheet test. This is what CPAs deal with every day, right? So if you look on paper and your total assets are less than the sum of your total liabilities, then you are, by definition, on a balance sheet test, considered insolvent, and again, a distribution would be scrutinized. Okay, so talking about certificate of dissolution, getting near the end of the presentation here. So in Pennsylvania, articles of dissolution, with respect to corporations, articles of dissolution shall be filed, okay? So that word shall is considered to be mandatory, so articles of dissolution shall be filed with respect to corporations. With respect to LLCs, filing a certificate of dissolution is permissive, and there's the statute that states that. So there are a number of events or decisions or occurrences which may happen, which may prompt the decision to dissolve. That could be the consent of the parties, could be a finding of wrongdoing or something of that nature. The only purpose, once you file that certificate of dissolution, the only purpose that the LLC is in business for at that point is winding up the LLC's business affairs. So notifying creditors, notifying other entities who would require notice that the company will soon not be in existence. The certificate of dissolution does not end the business's existence right then and there, but it does impart constructive notice to people who would be members or managers of the business. So people, for example, creditors who to whom the LLC owes a debt obligation would be on notice that they have a certain amount of time to make a claim against the LLC to get that debt back before it will become too late. Constructive notice, this is sort of a legal term that sometimes I forget, maybe I should explain. Constructive notice means that you may not have actual notice in that, oh, I've heard personally myself that this business is going to be shutting its doors, but certificate of dissolution has been filed with the appropriate office, and therefore, if I chose to look, I could find that information and learn about it. So the constructive notice, once you file it with the office, that results in constructive notice. Certificate of termination must be filed. Okay, this is mandatory. And the result of a certificate of termination, this is essentially the final nail in the coffin for the LLC. The period of constructive notice that we were just talking about to creditors and the like would end at this point once you file the certificate of termination. So as to known claims, once you file the certificate, there's a period of time in which the members file direct or provide direct notice to claimants if there's a known claim against the LLC at that time. So basically they would have to follow through with that claim. If the members of the LLC believe there could be other claims out there but don't know, then they are required by Section 8875 to provide publication that the certificate of termination has been filed. And so in summary,
I do have a question.
we have a question.
So can you recommend an attorney that does or works with an accountant? For example, I talked with my accountant and he is not well versed in starting an LLC. I am a disabled veteran on a fixed income and having a hard time getting the finances together for these initial fees.
Okay, we have an accountant in this room. No pressure. But yeah, short answer, yes, I know lots of attorneys who know accountants who work in conjunction with accountants. As I said before, these types of decisions are made really in tandem, and you want to have the right advice coming from both sides when figuring out tax implications, for sure.
I think one suggestion might be that they contact the local bar association for an attorney.
Absolutely, that would be. And SCORE also has a robust network of referrals for accountants as well. So that would be another option. Yeah.
For a single member, for a single member LLC, such as a website consultant, what type of lawyer is recommended? And what should we expect for attorney fees for the operating agreement?
Type of lawyer person. Well, any type of lawyer who specializes in commercial business practice, a lawyer who prepares documents or prepares an LLC for multi-member is just as capable and well-versed in preparing for single member LLCs as well. In terms of attorney's fees, I mean, that question depends on a lot of factors. Locality. So if you hire a business commercial law lawyer in Philadelphia, it's going to cost you more than if you hire them in Lebanon County. So that really depends on the market. It depends on the geography. Yeah.
The normal way an attorney would bill this would be by the hour, I would assume.
Yes, correct.
And depending on how complicated the operating agreement is,
Right.
would depend on how much time is spent.
Yeah.
So let's take this individual person who's a web developer, single person, web developer. Is that half a day? Is that 2 hours? Is that an hour? I mean, I'm not putting you on the spot here, but just to give this person an idea.
But you're right that you have to take into consideration also the level of complexity with the type of operating agreement you're looking for. Typically with a single member LLC, I can't imagine that would be too complicated. So yeah, in terms of, and it also, our firm at Buzzgood, we're very lucky. We have an excellent software for our business and commercial practice where we can generate these documents. And like I was saying earlier, with respect to those operating agreements, they have a lot of provisions that are already in there and they're kind of pro forma, and then you go in and insert the relevant provisions that are applicable to you. So we're able to, I would say, generate an operating agreement within 2 hours or less.
That's a simple one.
Yeah,
It
that's
depends, I would think, on the demands, what your client expects and how well organized can they answer the questions? Do they know what they want, and what their needs are?
absolutely.
Because that's what I find in the accounting practice. Doing one tax return and another one, absolutely equal complexity.
Very true.
But how organized their documents are
Very
makes a
true.
big difference at the time.
That's an excellent point. The more you come in, if you just throw all of your W-2s and earnings to your accountant at the end of the year, right before, on April 10th, it's going to be very hard to get everything organized and ready to go on time. Same is true for an attorney. If you come in and you're organized about all of your documents, you have everything ready to go, you have a clear plan in mind for how you want to organize your business, it shouldn't take much time at all. And I throw out that 2 hours earlier just sort of guesstimating the amount of time based on a single member LLC that was pretty straightforward. So certainly having all your ducks in a row would help you and would help me or any other attorney help you. So
I've read about an FLLC, which seems to be intended for family businesses, especially farms. What are the benefits or negatives?
What is it?
FLLC.
I don't know who asked the question, but give them a congratulations because they stumped the presenter. I'll have to look into that and get back with you. I would assume it probably doesn't have a whole lot of, there are probably some variations on a theme here with respect to the LLC. It's maybe tailored, an individual says that, towards the agricultural industry or family farms or something like that. I'm sure there's some sort of variation there that makes it more appropriate for that. But short answer is I don't know, and I'll look into it and follow up with them.
Okay. In a multi-member LLC, how should the two partners hold ownership? Should each member hold ownership in their own LLC, or is there any risk to owning in their personal name? I want to set up a business with a partner, but some people have told me that my partner and I should form our own entities to hold ownership of the joint LLC.
That's an interesting question. Again, this one would be very fact-based. I want to know more about the relationships between those two partners there in the end. So it would be an LLC, but with each partner having a separate LLC individually, if I think I understood the question right. That could certainly have some tax implications, and I'd want to know some more information about that. If the issue is you don't know if you want to get into business with this person, then I don't know if forming your own LLC would necessarily, I'm trying to think what kind of extra protections that would provide. But again, that's an excellent question. I think you would want to fully explore all of the implications for liability and taxes before you go ahead with devising any unique structure like that.
Another one, what if I intend on doing business in multiple states? Is there anything in particular to do differently?
Well, it depends on what the business is. When you file an LLC in Pennsylvania, it's okay to conduct business across state lines. Cleaning services. Okay. No, you don't have to file. If the question is, do you have to file an LLC in every state that you do business? The LLC filed in Pennsylvania is intracommerce, so you'd be able to conduct business in any state where you had a business presence. But the so-called nerve center of where your business is located would be Pennsylvania.
Can a member of the LLC be a foreign national?
Yeah, before I give a definitive answer there, I'd want to, these are excellent questions. I would want to make sure I follow up with that person and get them accurate information.
What are some of the business insurance requirements to protect the LLC?
Yeah, well, that's a very important question. So business insurance goes back to the issue really of protecting the corporate veil. So actually, I think this was probably included in my summary here. So I'll just go ahead and address that part now. So having business insurance is goes a long way towards providing adequate capital to your LLC to show that that this isn't just a shell corporation, that we're the real deal. We're in business here. We have insurance protection, and it goes a long way towards maintaining the separate legal entity status from the individual owner. So in terms of having insurance, absolutely recommended. You also want to be very careful that you comply with the applicable state law for whatever your business is. There may be specific insurance requirements for whatever your industry may be. So you want to also make sure that if it's one thing to have insurance, but do you have the right kind of insurance? Do you have enough insurance? And if you fall below that, then again, you get into this question of is this truly a separate legal entity worthy of the corporate veil protection?
Can one member of the LLC be another LLC?
Yes. Yes. Short answer, yes.
Now the last one. Do you recommend using websites like LegalZoom to set up an LLC?
No. No. Look, in all seriousness, LegalZoom has its place. I'm sure it probably engenders the same feeling that WebMD does among doctors. I don't know that for sure, but I'm just guessing that you can go on LegalZoom and you may get accurate information some of the time, but if you really want someone who's going to take your scenario into account and all of your relevant information and give you the best advice, you really need to speak to an attorney. You don't want to over rely on things like that. Now, there are situations where, very simple documents or things like that. Sure, there's very, minimal risk of going wrong. But when it gets really past that really threshold stage of, minimally important documents, you would definitely want to have an attorney take a look at those. All right.
I've seen some horror stories. I had one client that went online and formed a corporation, and they ended up spending thousands and thousands. They got suckered into something. And shouldn't have.
You're right. And what ends up happening there is, and I've seen this in my short amount of practice, you have people who do, attempt to do it by themselves or draft an operating agreement themselves, or they go on LegalZoom, and it turns out that they didn't do something 100% right. And if it's not done the right way, then it's probably not going to be legit. And you end up spending more in legal fees, taking it to an attorney to undo what was incorrectly done and then do it the right way. So moral of the story, for something as important as this and as significant as this, best to involve an attorney. It's not outrageously expensive, and get it done right the first time. So thank you all for tuning in today. It's been, I'm sorry?
I have a question. Consequences of not filing a certificate of termination.
Consequences of not filing. Well, what it could potentially do, and I want to fully explore this to see what all ramifications are out there, is it would extend that period of constructive notice. So it basically would extend the period in which people could continue to file claims against the businesses. So the certificate of termination is essentially like okay, we're done. So we want to definitely have that firm endpoint for that purpose. So great. Are there any other questions? Good.
There's one comment.
Yep.
I love that I didn't hear it depends as an answer to the questions. And I got an excellent class. Thank you.
Oh, thank you very much. It depends is a very common answer for legal professionals. So I try to, look, there are some times where you have to give that answer, but I try to give, as concrete an answer as I can. So thank you all for tuning in today and, listening to an attorney flap his jaws up here for an hour. And I appreciate you all. And again, thank you to the Chamber and the SCORE for having me. It's been a pleasure.
Thank you.
Thank you all.